Welcome traders to this week's analysis of DXY Dollar Strength Index. My name is Vic. Thanks for joining me here. We are just starting the new month, so it makes sense to actually look at the higher time frame to see where we are standing, because our current reference point actually tells us, it guides us on where we could be going next. So let me actually quickly revise what we have been discussing for a long period of time already. What we have right now is actually on multi-year basis. We have this oops let me actually change this so that I can draw better. Okay, what we have is that we have a W pattern here on multi-year basis, and this W pattern has not finished here. It actually finishes somewhere around here. So on multi-year basis, if the market actually breaks through this level, then it is expected to go even higher. That is what is expected on the bullish side. Market fell down from this particular level to previous structure level here, and this structure has been acting as kind of support or support area or demand zone. And what we had after corona here, the market started to fall, got supported by here, performed a double top, a double bottom, and market started to go up. So right now, if I just zoom in a little bit, this is where we are. So market fell down, went up, created a double bottom, and then started to move up. Now right now it is struggling with this particular structure here. All right, and this is kind of the mid of this entire channel, the sideways channel that we have got. Once it is broken, if it gets broken, then we are looking for a good move to the upside. And there are a few factors which can actually support that, and I've been actually posting about that. If this thing is broken, then dollar can go parabolic. And what I mean by that is it can easily reach around that time, around 98 or even 100, if it actually starts to break through this level. On the bear side, we still have few levels here, because when dollar started to move higher, it actually left few gaps and few levels here, which we'll see in a second. But this is the overall picture here. Now, until the dollar actually breaks through this, now we cannot say that this is actually bearish on multi-year basis, because if it actually breaks through this midpoint, at that moment of time, we will have this M pattern, and the dollar will probably fall into near about 80 level or so if this level is broken. But because it has not been broken, and in fact it has created a double bottom here, we are still in bullish mode for now. Okay, if market breaks through this, then we know that it is going towards 110 level. Okay, so this is higher time frame picture on multi-year basis. Let's look at it on multi-month basis. So if I go to the weekly time frame and see what has been happening. Okay, on multi-month basis, which is basically multi-week basis as well. So what we have is that we have got a W pattern here, and market is struggling with this previous structure support level. And if the market breaks through this, and it can actually easily reach this sort of area, which is going to be near about 97, and it can also go near about here, a little extreme level, which is 98. If the market finds enough momentum, it can go and test near about 100 level as well. But it all depends on how it actually breaks through this, and whether it is able to reach some of these levels or not. um, on the bullish side of things, I'll cover that first, because that is looking very very nice here at the moment. And it remains to be seen how actually it actually behaves in November month. But what you will notice that we have this inverse head and shoulders pattern here. It's a weird looking one. It's a split head sort of thing, but nonetheless you can consider this as an inverse head and shoulders. And we also have this double bottom here, so that also signifies that the market is kind of bullish. And if this neckline is broken, then we are looking for an upward move. Okay, and that is why I'm saying that the market can be parabolic. It can be going very very high up. So that's one of the reasons. Another reason that I've got here is market is kind of following a symmetry here. So if I just draw a line, symmetrical line, we have this, we have this, we have this, we have this, right? So if the market breaks through this, then it is probably going to do the same thing here as well. So this is the kind of area that market can target if this is breaking through this level here. Okay, another thing that we can watch out for is few trend lines, and other stuff. So if I draw something like this market actually broke through it, performed a retest, and it started to go higher. And we also had this trend line which was broken, retested, broken, retested. So this is like, it's going upwards. And this structure level has also been broken. So this is a W pattern which was already completed, performed a retest, and instead of falling down deeper, it actually started to go up, created a new structure. So when we have a new higher high here, now what do we expect? We expect bullish momentum to continue. However, this entire thing that we have seen is kind of a correction on the previous impulse. Okay, so right now we are in a correction mode which can actually go deeper into this previous leg. That's what we can expect. How it will only be like, proper bullish on multi-month basis once it has broken through this. So far this is still a correction, and ultimately at some point in time the market is expected to reverse. So this is what we have on multi-week basis. Let's clear this up and look at it on daily time frame. On daily time frame, if you remember, I've been posting about it that the market was expected to go higher from here. I posted a few actually messages on LinkedIn and Twitter and in Telegram group as well. So this is where I said, like, dollar could go parabolic, and this was like, a week before. It was towards the end of the third week of October, and I was expecting bullish move, which wasn't happening, but it actually happened on Friday, the last day of the month, and this is what I was expecting. DXY is an important, and this was the level 93.332. So I was expecting, like, the market to have a push to the upside from that level, and this is how it happened. Exactly from 93.332, it started to move up on the last day of the month, and this actually caught a lot of traders by surprise because they were long on Euro USD, they were long on gold, but they were not watching DXY. And gold had fantastic week. If you want to find out more about gold, I'll probably post an analysis on gold very shortly as well. Gold had a fantastic week as well because it fell right from the level that we were expecting it to fall from. So this is where we are standing. So let me bring in the analysis. Now, all of these blue lines are basically the market caps which have been left in the market. So ultimately, at some point in time, maybe this month, or next year, or maybe like next decade, at some point in time, the market is expected to come down and close these gaps. All of these blue lines are gaps. So you can probably see it on your chart here. Otherwise, I'll post a link to this chart in Telegram group and other places. Okay, what we have is that if the market starts to go higher and breaks through this level, as I said, 94.498, basically this high, then we are looking for upward move into this FCP zone here. Okay, this is an FCP zone that we have got, and if it goes a little bit extreme, then we can go for the next FCP zone, which is here. And in extreme cases, it can come to near about here, around 98.75 level as well, because that is kind of extreme level. And we also know that, if it is around there, then there is a good chance that it can probably try to touch 100 as well. But let's not, like, forget that we need to follow steps. So first step will be, if the market actually goes bullish and breaks through this previous high here and previous high here, then we are looking for next FCP zone, which is about 96 level here. And if that is also broken, then we are looking for next FCP zone around 96.621. If that is broken, then we are looking for next FCP zone around 98.172. And if that is also broken, then we are looking for around 100 level here. Okay, so that is the bullish side of it. But what happened here is that if I go back to my chart on monthly time frame, this is how the month ended. And this is actually kind of confusing because you see the market got pushed up towards the end of the month, but this candle usually is a sign that the market is still bearish. So what can happen is that in the month of November, it can try to, like, fill the candle, the previous candle. So what we need to see is how it actually opens this month. If it actually opens strongly and it continues to go higher, and if it goes beyond the previous high, then it will obviously be bullish. Otherwise, it will just simply try to fall down and um, basically fill the wick of this candle. So the bullish scenario solely depends on how it actually breaks through the upside, right? Otherwise it is simply going to fill the previous month's candle, and that's what we can expect in November month. If you look at the weekly is looking very strong. We have few trend lines and other stuff which can actually support the price, but we still need to see some strong movement upwards from here. So the next week is going to be very, very important because it will set the direction of possibly is going to set the direction of whole month. So if it actually breaks through this high, we're going higher. If it actually starts to go down, then we are going to fill the entire month wicks, entire month's wick, and it will probably come to one of these levels here. So on the bearish side of things, what we can expect is the market is possibly creating a M pattern, and if that happens, then it will probably come down to this level here at 93.384 to close that gap. There is another gap available around 92.985, which can also be closed, and we have another gap left around 92.755. So all of these gaps can be closed if the market comes down, creating an M pattern, and that will also possibly going to fill the entire wick of October month. Okay, so that's what we expect. But this is a good FCP zone that should provide some support somewhere around here. Now, these levels are I'm presenting these levels in advance and week in advance and month in advance. So I may have to revise them a little bit depending on how the market actually opens and how it reacts in the first week of the month. So this is my analysis on DXY. Hope you enjoyed this. If you found this useful in any way, please like and subscribe and share it with other traders and trading communities. And I'll see you in the next one. Have a great trading week next week.